This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia and China have agreed on the route and supply volumes for the planned Power of Siberia 2 gas pipeline, Russian state-run RIA news agency reported on Thursday, citing Energy Minister Sergei Sivalev. According to the signed memorandum, the pipeline will run via Mongolia and is expected to deliver around 50 billion cubic meters of gas annually. Russia and China gave their blessing to the vast pipeline project with a binding memorandum signed during Putin's visit to China, but little is known about the key details of the pipeline, and Gazprom said that pricing was yet to be agreed.
Venezuela's oil exports surpassed 900,000 barrels per day in August, the highest level since November, after energy producer Chevron received a license that has allowed the OPEC countries' crude to return to the U.S. market after a 4-month pause, shipping data showed. The U.S. Treasury Department last month issued a restricted authorization for Chevron, one of the main partners of Venezuelan state company PDVSA, to operate in the sanctioned South American country and export its oil. The resumption of Chevron flows to the U.S., coupled with larger cargoes to Venezuela's primary destination of China, led to a 27% increase in exports last month to an average of 966,485 barrels of oil per day, according to data based on tanker movements.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles in major storage hubs Singapore soared to their highest in over 8 months, as heavy volumes of imports continued to flood storage tanks, latest data showed. Residual fuel inventories climbed to 27.4 million barrels, 4.31 million metric tons, in the week to September 3, the highest since mid-December, based on Enterprise Singapore. Imports rose to above 1 million tons in the week, led by a jump in Brazilian arrivals. Supplies from various regions remained high, including from Saudi Arabia and Indonesia.
The Indonesian government will hold discussions with private fuel distributors, an official said on Thursday, as supply runs low at petrol stations operated by Shell and BP-KR. Shell and BP-KR, the operator of BP's fuel stations, said they had inventory shortages for some gasoline products. Shell said last week some of its products would not be available at some fuel stations for an undetermined period. The market share of private fuel distributors, which sell only unsubsidized fuels, is small compared to those controlled by state firm Pertamina. However, restrictions in sales of subsidized fuel have caused demand shifts to Shell and BP, local media reported. Next, we have the top news in metal markets. Copper prices pulled back on Thursday on a firm dollar and as investors locked in profits from a rally to a 5-month peak ahead of key U.S. jobs data and amid uncertainty about tariffs. 3-month copper on the London Metal Exchange slipped 0.7% to $9,906 per metric ton by 14:15 GMT, a day after hitting its strongest since March 26 at $10,038. LME copper has gained 13% so far this year. It seems to be simply profit-taking ahead of these economic data prints, said Ole Hansen, head of commodity strategy at Saxo Bank in Copenhagen.
Chinese lithium producer Qinghai Salt Lake said on Thursday that compliance investigations in Qinghai province into mining licenses for the metal used in making electric vehicle batteries are part of a new trend of stricter supervision in the sector. The investigations into mining licenses are part of a harder line being taken by regulators, Qinghai Salt Lake said in a filing to the Shenzhen Stock Exchange, in response to investor questions about the subject. Qinghai Salt Lake said its own mining business is fully compliant, and production and operation are stable.
We will now look at the top news in the agricultural sector.
Under blazing skies at a tea plantation in India's northeastern state of Assam, Pika Kamini Kurmi wears an umbrella fastened over her head to keep her hands free to pluck delicate leaves from the bushes. When it's really hot, my head spins and my heart starts beating very fast, said Kurmi, one of the scores of women employed for their dexterous fingers, instead of machines that harvest most conventional crops within a matter of days. Weather extremes are shriveling harvests on India's tea plantations, Endangering the future of an industry famed for beverages as refreshing as Assam and Darjeeling, while reshaping a global trade estimated at more than $10 billion a year. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.